Good afternoon, 7X investors. Welcome to the first video that we're posting on YouTube. This is our new YouTube channel, and 7X is going to go through a big expansion. Our main theme here is we gain profits and keep them by managing our edge. So it's real important that we manage our edge. We don't come in here to you being a bear or a bull. We simply try to see what the market is telling us, or what the market is going to tell us. So we're going to cover today a few things. We're going to cover, first of all, what kind of news is coming out next week, why it's so important. Second of all, we're going to cover three pairs. We're going to cover the Dixie, the S&P or the MS charts, S&P, and we're going to cover gold. We'll probably squeeze in a VIX chart there as well. But we want to make sure that you understand that what we're showing you here today are probabilities. And we're looking for levels to trade, or levels to break to be able to trade. And that's what we do, is we wait for certain levels to be achieved. And once those levels are achieved or violated, then we go ahead and look to put in our trade. So to start off with, the news next week. Let's go ahead and look at the news. Okay, so the big news coming out next week is really, it piles in on Wednesday. So that's Wednesday, December the 14th. And if you scroll down, it's a huge news day. Don't even know if you want to be trading that day. But if you're brave like we are, we're going to trade it because we can get the most out of it. So if we scroll down, we see that we come into the afternoon of that day, and we have right there FOMC statement, Fed interest rate decision. Now, it's no surprise that everyone is expecting the Fed to raise rates by 50 basis points. We believe that they will do that. We see no reason for them not to do that. News has been relatively so-so. We are getting a turn in PPI. We are getting a turn in PMIs. And now we're starting to see some turns in CPI. Okay? So, no, we're not going to say that they're going to make them lower. We're not going to say they're going to make them higher. I think they stick with 50 basis points. What really is going to kind of move the market is the statement. And then after that, the conference. So this is the way I usually trade this. If I see the market going a certain direction before the statement, say like the market's going long before the statement, I will short the market on the news. If I see that the market has gone short before it, I will go long the news. So before the news release is done, based upon one of those two things, I will put in an order long or short. If the market is moving sideways, I will just hang out and see what happens. Okay? Because there's no really clear direction. Another thing that's coming out next week, if we scroll on up here, see if I can find it. This right here, the day before, is CPI. Okay? Now, CPI is a lagging indicator compared to PPI or PMI, but for whatever reason, the market looks at it the most, or they use it to play people the most. How about we put it that way? So CPI is expected to come in lower than last time year over year. So we see a drop here month over month, looks even Steven. If those come in higher, any one of those come in higher, the market's going to, meaning the S&P, the NASDAQ, they're going to move down. If they come in lower, they could move up. And that's going to be kind of a telltale sign, because if they come in a little higher and the market moves down, that could mean the following day when we have this rate statement, that means the market could turn around and clean up all that move down, and vice versa. Okay? And we're going to look for those levels. We're going to look in these charts the possibility of that happening. Okay? So the first one up on the chopping block, let's go ahead and just make it dollar index. Let's just bring up the dollar index, and we're going to go through that first and look at a few things here. Here's the daily. This is the larger term weekly chart. So if we go out on the weekly chart, we see that larger term channel right there. So there's that. Let's squeeze this up a little bit. This channel actually runs like this. I'll put it in here real fast so you can see it. That's the big weekly channel right there, okay? So we went short this at the top up here because we hit the top of the channel. And we expected a pullback, which has been a very good trade. We're still in it. We go in and out of these trades over time. We have two separate ways we trade in here. We have some long-term trading and we have some very short day trading we do. Mostly that's done on the ES and NASDAQ, the NQ, which is where we play those mostly. Where we get most of our daily profits. These are kind of a little bit longer term trades that we play in. So this is kind of what we're looking at here in the possibilities. And we could see, so we came down here, we held support on this pullback here. It pushed up, hit resistance, came down, kind of broke through support, didn't it? We got a nice solid candle break there. It went up today, it tested the support and it pulled back. So there's several different things, or a couple things that could happen here, okay? So this could continue down, which means markets are going to go long until it hits this support zone and moves up there. Or there's nothing that says it couldn't break back up here, hit here, and then move down, pull back, and then follow through. Those are the two things we are looking at. So how do we play this? How do we play this out? What are we looking for? Well, the first thing we're looking for, and we're going to draw it in here because this is a big area right here. This is the support zone, which it came up and tested today. If we break above this support zone, we're going to look for a move back up to about right here. And that's going to put us at $107.5 to 108 zone. And once we hit that zone, we're going to look for a move to the downside. Okay? So we could essentially come up here and hit this resistant level right here. So you see the range a little bit better. I know it's broken down here, but it doesn't mean it could come back up in here and come up to this resistance zone. So in this resistance zone here, we would put in our short there and we would expect for a downside move in dollar, which would mean an upside move in the S&P, the NASDAQ, upside move in gold, downside move in volatility, and in the yields, 10-year yields, which we'll get to next. So that's what we're looking for in dollar. If we continue to break to the downside, we are looking at this zone down here for a bounce. So that means we would continue to see markets fall into next week. Markets go up into next week and dollar fall down to this level. Then we get either CPI or Fed news, and we would take a short long here up to this level right here. And that's how we would play that side of it. Whichever one of those plays out, that's how we're going to play it. That's how we're going to trade it. So we're going to look at the levels. And when it reaches one of those levels and starts to turn, we put the trade in. If it holds the resistance and rolls over, we'll put the trade in. If it breaks the resistance and holds above it, we'll wait. We may even go long up to that level of 107 and some change. And then roll over with it, go short. And that's all we're looking for, okay? If we get too far outside of those trades, like say we put in a trade here and it gets going too long, we exit out of the trade as quickly as possible. Because at the end of this video, I'm going to tell you how we make money in this business. So stay tuned. Next, we're going to go to, let's go ahead and just put, let's look at the yields. Okay, yields right here. Yields have a definite channel on it. We squeeze this up. We have a gold chart on here, and I'll show you the reason for that later on. But it has a channel on it. And this channel runs from here to here. And the bottom of the channel runs from here to here. Okay, so you can see those channels. So we're looking to go back down to the 200 here eventually. All right, let's move that around. I'll move gold down a little bit. Squeeze it up a little bit, move it down around a little bit. There we go. Okay. We had a head and shoulders on this. Here's the shoulder. Here's the head. And here's the other shoulder right over there. Okay, so you see that head and shoulders. That head and shoulders is pretty much almost played out. So if we take this right here, that's the full extent of the move right there. The head and shoulders part of it, meaning this left shoulder here, has played out, okay? So we came down to here, we bounced, and it broke through this fib, and now we're heading lower. So we're playing in a larger fib zone right now, and I want to show you what that fib zone is. So if we take a fib from here to this high right here, we bounced right off the 50 there. And that's the fib zone we're playing in. And we're looking for that to go up, roll over, and come down to this zone right there, right on channel, right where the 200. Yields are going to go down to this level at about 3.2 is what we're projecting. So how do we watch yields? Obviously, we're not trading this. You can trade in future contracts, but we're not going to get into that. We don't usually trade those. But how do we do this? How does it help us trade our other things like dollars, related currencies, markets, S&P, ES&Q? How does it help us trade those? QQQ, the SPY, how does it help us trade those? Well, when the yield goes up, didn't want to do that. When the yield goes up, that means markets go down. Gold goes down. Dollar goes what way? Goes down. Right now, that's not always the case. These all can change, by the way. But right now, I'm telling you the way they operate, okay? If yields go down, markets go up. Dollar goes down. Euro dollar goes up. Gold goes up. This is a gold chart down below here. Do you see the correlation? This is the correlation here to that. So if you can read yields, but you can't read gold, you know how to trade gold. If you can read gold, but you can't read yields, you know how to trade yields. But this is telling us that we could see a move up, which means what are we looking for in gold? Well, we're looking to see if this channel line here gets filled. So we have a channel line here. If gold comes down here to the bottom of this channel line, then yields are going to go up to this level. And we're going to long gold here up to this level right here. And yields are we're going to go short yields. And that means gold is going to break out. And that's the move we'd be looking for from here to here, which if you put a fib on it, you'd range a fib from here to here. And that puts you up there about the 61 level. And that's the swing we would be trading in gold. So we would enter a long at this position and hold it up to about the 50 fib, which is about it's a little over $2,000 in gold. That'd be a very nice move in gold. And that's what we'd be looking for. That's the levels we're trading. So right now, this is a range in gold. We don't want to trade it. We either want to trade it either up here at the top of the channel to the downside, or we want to more likely, which I prefer to do, see a downwards move and trade it long at the bottom of the channel. Just like here, I would like to see yields go up, reach to a resistant level, and then have them roll over and come down. So what we're looking like here is that the first of the week, we're going to have some down moves in the markets, like the S&P, the NASDAQ, in gold, probably in pound dollar is going to move down. Euro dollar is probably going to move down. We'll wait and see. We'll wait and see what the market's telling us, but we know our levels. And if it hits those levels, that's where we put in the trade. And that gives us the least amount of risk. So if we put in a trade here at this level on gold at 1.921, our stock just has to be down a little further, maybe at about 1. Remember, this is a daily chart, about 1.888 or a little below that, and we're out of the trade. It would have to close below the, or if you don't put in a stop, you'd have to close solid below this channel. And then we turn around, then that would be a short, and we wouldn't turn around and buy it. We would trade it further down to a lower fib level. And what would that lower fib level be on gold? Right down here, we just take a fib from here to here. That would be our top right there. And our trade level would be about 1.6 to where we would go ahead and buy it down in that range. So we take it level by level. So there it is. Well, let's head on over to the S&P. We'll do the S&P and we'll finish up with that. S&P is at a very interesting spot. We're going to look at this real carefully. This is the daily chart. We had it coming down, going up. It didn't quite get there, so we moved to a certain space. And if we take the fib level on this part and we move it to here, that got right around the 50 and bounced, okay? If we take it to the very bottom of the move, which is down here, which is the better spot for this daily chart, you can see it almost pinged the 50 right there. That's why we were expecting it to roll back up. Now, we did get in this trade to the long side, but this looks like just a pullback, possibly to go lower. Again, it has to break this channel for us to expect it to go lower. So we're going to look at both sides. So it could come down, hit the channel, then blow off, which is my preferred outlook, but we never know. But we see here it pulled up to this 50 fib right there. And now we have a wick on that. So there is a good chance we could roll over, come back down, retest this low here. And that low sets in there about 39.20. But if we break that, we're going down to 38.50. So how do we trade the break? If we pull back here, we go long. But if we break through, we get stopped out, then how do we trade the break? And that's what we'll show you here, okay? Remember, I'm showing you what to do at level to level. And that's the way you have to play this market. So if we break down, say we break down, we're going to swing this to find the final move. That breakdown is going to go to about right here. This support zone. See this support zone that goes right across here? You get a support zone here. We pull it back more. You can see that real big support zone right here. And that's the one we're looking at. So this support zone that goes right across here. This one right here. Oh, there's the bell. That support zone right there. That's where we're going to go to. So if this breaks, we'll trade it down to that level. And once it gets to that level, we'll go long up to the resistance of this channel line right there. So we'll go short, we'll go long, and possibly this swings down further. Okay, we'll just have to wait. We don't want to go too far ahead. We just want to see what the market gives us as it gives it to us. So if this fails up here and it starts to cascade down to this level, this is going to be our long here, okay, depending on where we're at, what day it is, so forth. We would go long there, and we expect this to shoot up to the top, up there. If this breaks and stops us out of that long position, we go down, we hurry up, turn around, get short down to 3850 area. 3860. It's probably gonna go all the way to 3850. That's a big support zone. And then we get long it back up to the retest of this channel. And that's how we play the S&P next week. Be kind of similar for the NASDAQ. Now, the US 30 has broken out and is doing its pullback as we expected. If this pullback, when it gets down to this level, if it stops there, then what's going to happen is we're going to see this start to make its move back up and everything changes. But the US 30 has been leading the way of this whole move in markets. So please be aware of that. With this understanding, there's a few things we can garner, especially from the auctions this week. And we want to talk just a little bit about those. So the auctions this week, they came in at a low rate of about 3.3%. And that is like, so the high of it was about 3.65, I think. That's 15 basis points below the current RRP. And we're expecting a rate hike in just a few days. We're expecting the rate hike next week, as we posted here. All right, we're going to look at. And so this means a couple of things. Either the Fed can't perfectly control interest rates, or the collateral demands that are out there they're not so much about gaining return as they are about the necessity of holding off insolvency, okay? And so we could be seeing solvency issues that are creeping in, which means that this bear market rally we're in, now I still believe that we have more to go in the bear market rally. We have 4 phases of a bear market, and the first phase we had the push down here. We're now having what's called the bear market rally. The second phase, how far that goes, I don't know. I have an arrow here. I don't know if it goes that far, folks. It could go higher than all-time highs. Could be a blow-off top. Some people are predicting that. I don't know. We're just going to trade it as it goes. But at some point, this bear market rally is going to end. And when it ends, we're going to have a severe bear market that's going to flush any bulls that are left out. And so looking at the race this week, it kind of displayed that, the auctions this week, sorry. And so with that being the case, I am still bullish right now in the stock market, in stocks and so forth, in the indexes, but not forever. I'm just looking for this bear market rally to end. And next, a little bit about 7X. In here, we have traders that trade daily in front of you so you can see how they trade. You get to see the frustration they go through and how they handle it. You get to see when they incur a loss and how they handle that. You get to see how they can turn that loss around and make it into a green or profitable day and how they do that. You get to have the feeling of how to trade. Now, if you're disciplined enough and if you have the correct psychology, you can trade along with the trader if you want to. But we show you exactly what we trade. We show you our chart that we are trading on, and you see our wins and you see our losses in real time with real money. What we teach in 7X is we don't sell you a strategy. We do not sell you a bot, okay? Everything you have that you need to trade with is right in the palm of your hands. The problem you have is using it correctly because you don't have the psychology needed to do so. You don't have the understanding of how to manage your edge. There's a lot of people out there that have a lot of good systems they're selling. They're good systems, nothing wrong with them. But the people that are buying them, they're missing one key ingredient, and that's they cannot manage their edge. That's where we step in, and that's what's different about our community is we teach you and help you overcome the psychological barriers you may be having in your life when it comes to trading. We're not a marriage counselor business here. We just deal with trading, but we can help you overcome those psychological barriers, and then we can teach you how to manage the system we teach you to trade in. Therefore, through repetition and getting those issues taken care of, you become a proficient, consistently profitable trader. That's what we do here at 7X. So, if you would like to be a part of our community, go ahead and click the link in this YouTube video, and we will get you hooked up with someone that can give you more information. This is the outlook for next week. These are the levels we're looking at to trade. And when it gets those levels, we'll be able to make a decision on what direction we want to take these things. And we'll do pretty good at it. So take care. Have a great weekend. We will see you on Monday. And get ready for a very crazy before Christmas week.